What's up, everyone? It's Dre Trades here, and we're going to do a little bit something different today. We're going to talk about one particular stock, and we're going to kind of get into the fundamentals just a little bit. And I want to throw a scenario out there that is kind of doomsday-ish, all right? I know since March, since the March decline, nobody knows what doomsday even means. Or I should say since the March recovery, no one knows what doomsday is. But I want to talk about a doomsday scenario, okay? Doomsday just meaning a correction, a bear market, or whatever you want to call it. Basically, where stocks go down. We opened down pretty big this morning, and it's an impressive recovery. I'm actually impressed. I'm making this recording at October 15th, 310, right? And we opened down, what was about 200, 300 points or whatever at the low. And we've been marching up to flatline, ever since the market opened. So this is what the market looks like. You can see the big boys all down. Looking at the heat map, here, I'll click on it. And you can see the big boys all down. And, it's some life coming back. You got healthcare, it's got railroads, real estate, industrials. Industrials is hot. Utilities, I bought some utilities today. I just bought the straight up XLU. And I'm going to use the XLU for my short-term money, believe it or not. All right, so it's better than just leaving it in the bank. I'd rather take the risk of losing some by the XLU going down than just sitting there. So I'm going to go ahead and I put some short-term money into the XLU. All right, so this is the heat map, and you can see what's going on. So the big stocks are not doing it, the little stocks are. So let's get to the subject of this video, and that stock is FSLY. And I'm laughing because I'm just looking at this candle, and it's just unbelievable. This was actually one of those straight up stocks that I just been totally avoiding. Yes, I know I missed out on incredible gains, but this stock is the reason why I just had to take a pass. Yes, I missed out on a lot of gains. Yes, I did. But did I really? If I got caught in today's action, I mean, the stock is down 27% on some bad news. But personally, I really didn't think it was that bad. So basically, it makes me think that, well, we already know that these stocks are way overvalued. And I think reality is setting in. So what is FSLY? FSLY is a cloud company, right? It's basically, if you want to make an app, right? And you want to develop an app and you want to put it in the cloud, right? You want to put it in the cloud. You want people to buy your app. You're going to go talk to a company like FSLY and make that happen. All right. So here it is. They are edge cloud platform for processing, servicing, and securing its customer applications. The edge cloud is a category of infrastructure as a service that enables developers to build, secure, and deliver digital experiences at the edge of the internet. So that's basically it. If you want an app, you go into FSLY, right, to help make that happen, to make it available for all. All right, so these guys warn that the third quarter revenue will miss as TikTok usage comes up short. So you remember when the president was talking about they're trying to get rid of TikTok, they want to ban it from the United States and blah, 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 blah. Well, anyway, that action affected FSLY's revenue. Why? I really don't know. I would think it's the opposite because people, from what I understand, all right, see, I got to backtrack a little bit. From what I understand, if they would have banned it, it would have just banned new downloads, but the people that had it already would have been able to still use the app. So if that's true, now I don't know if that's true, but that's how I understand it. If that's true, wouldn't more people get on TikTok to try to, get the app and kind of explore or whatever? But I guess not. Maybe I'm wrong, but that's how I understand it. But basically, they warned Tuesday that its third quarter revenue will miss previous guidance because its largest customer, TikTok, made less use of its cloud services than previously expected. So the company said now it's only going to earn 70 to 71 million versus the earlier guidance of 73.5 to 75.5. So basically, they're going to fall short $3 million. So now TikTok is only accounts for 12% of their revenue. 12%. So if this one company that accounts for 12% is going to fall short $3 million, which we all understand maybe why, I don't know. Why is that bring it down 26, 27% off the stock price? I just find, all right, you lose 27% of your value because you're falling short $3 million? Am I missing something? Am I missing something? What is 3 million? I don't even know how many type that many zeros in the calculator. 3 million, let me see, divided by 70, we'll call it 73 million. That's 4%, right? 4%, so 71, let me see, times 4%. Yeah, that's basically 4% of your revenues, and you're going to go down 27% of your stock price. Now, my math is not the greatest. If I fucked it up, just let me know. Okay, just let me know, and I'll try to straighten out. This is why I just look at charts. I really don't go over fundamentals, but we got to go over these fundamentals because I think what's happening here is FSLY is showing us the picture of this coming earnings season. Okay, does that make sense? Because we have a lot of high flyers in the market, right? And we're going to glance at some of their charts. Some is worse than others, and I'm not even going to name them all, but you know them all. All right, that's Apple, Amazon, Tesla, Zoom, Peloton, and Microsoft. We're going to, most of these stocks shot straight up just like FSLY. Over, up 5% a day over no news. So now FSLY warned, okay, this is not the actual earnings. They warned, they basically say, hey, next month, you might want to hold off on running up the stock price because it's not looking good for us next month. We're just going to be average, all right, or maybe below average. We're going to be 3 million short. Now, did they have an idea that they was going to lose 27% of their revenue? If you would have told me that before today, I would have said, no, man, they didn't know. But I don't know. If I come down here, all right, I'm on FinViz, and I look at the insider buying and selling, all you see is insider sales. And they are stepped up since August for the most part, all the way till now. You had this guy, Arthur Bergman. He's the chief architect and executive chair. He just dumped on October 12th, which was 3 days ago, $11.5 million he sold. And a week before that, 8.8 million. Now, granted, these are scheduled, that you see, because he's been dumping these shares. On September 28th, he got another 8.3 million, and then September 21st, 8.3. So he's on some kind of scheduled sale. But what triggered that? Right? Because early, I don't see him selling until about August 19th. All right. Oh, no, right here, August 7th. So basically around August, this guy's starting to sell a shitload of shares. I can't say that word. Sell a shitload of shares. Right? That's just him. You got the CEO on October 2nd. He sold 2 million. And then he also get on September 18th, 817,000. But just look at the insider selling. It's crazy. It's insane. Right? And it all started in August. Now, is that when the TikTok stuff started going down? So they knew. They probably knew that, yeah, this might take 27% of our stock price down. And let me tell you something. We're going to look at the chart. I know I'm a little all over today, and I lost my chart. Here it is. Looking at that price action and looking at that bar, that weekly candle. Okay, today is Thursday, tomorrow's Friday. We got one more day to improve this candle. This is a ugly, ugly candle. It's an outside week. I don't think it's going to stop at the resistance here. Excuse me. I don't think it's going to stop at the support here. I just don't think so. It's too much velocity. It's coming down too hard to stop. I think it's going straight through. So I'm basically saying, let's get to the charts. Here's FSLY right here on my Thinkorswim charts. And basically it's the same thing as FinViz. And I gotta admit it, before this week, you see I got everything even drawn already. I'm looking at this consolidation, right? And then you see the breakout. And I'm like, oh man, if I would have caught this, I would have been like, yeah, boy, and loaded up. It's breaking out, feeling good, making money, going from 100 to 120 in a week. And then here comes the warning. Gives it all back and then some, goes right back into the range, down 27%. Now, I think the velocity of this drop is too much for it to hold at the support of about $80. But we'll see. You never know. But it's right now it's trading back in the range, in the consolidation range. Okay? So let's look at the other charts and then I'll make my point. Let's bring up Apple. All right. We're going to look at some of these on a weekly and some of these on a monthly. Here's the monthly. Kind of, went out of control, right? Just straight up. And if you guys can't see my screen, just picture a stock chart and draw a line and point it up to the moon. That's what the charts I'm looking at. There's Apple. Let's look at Amazon. Amazon's kind of similar, right? Apple, Amazon. Let's look at Tesla. Right? Ooh, wow. Imagine you caught that. Wow. It's down 11% today, 2.6%. It was actually worse. Let's pull up Zoom video. Okay, there's Zoom, right? IPO'd not too long ago in April. And I don't know what the offering price is, but it started trading around $66. Right now it's $540. Unbelievable. April, May, June, July, August, September. In 6 months, you caught unbelievable. I would have just liked to buy one call. Peloton. Let's look at Peloton. It almost looks exactly like Zoom. It doesn't even look like I typed in Peloton because it's exactly the same. It started trading in the month of September last year. It's only around $25. Right now it's $137. It's having a great day today. It's up $5. It's up $5 every day. You want to make 5 points? Buy some Peloton today. Tomorrow sell it. You'll be 5 points to the upside. That's what this stock has been doing nonstop. I was even a bull. I'm still a bull, but I don't have the positions on because it totally, I got in around 80, 85. I got out about 125. I still got small positions on, but nowhere near the amount I had on before. Unbelievable. And I got out 124 thinking I'm being conservative. Yeah, nice still. That was a great trade. And now it's 137. Totally missed another 12 points or so. Whew, Microsoft. Not as bad. It's got a better angle, right? We're not going straight up to the moon, but maybe straight up to the moon, but maybe we going off to the upper atmosphere. Basically about a 70-degree angle from left to right. All right, so these stocks for the most part have been going straight up. Now, here's my thing. And what's the worst? Let me pull up Apple. Apple's pretty bad, yo. It's pretty bad for a super multi-trillion-dollar company. We just got our first warning from FSLY. And you've seen the stock price reaction. It's like, whoa. Just, whoa. Suppose Apple does the same thing. Suppose Apple's like, we ain't really selling many iPhones. We sold a lot of iPhones, but kind of not as much as we thought we was going to sell. What is going to happen to that stock? I mean, that's what bothers me. I mean, these stocks are so overvalued, in my opinion, that it better be perfect. You better not lose. You see, FSLY just lost 3 million over a position. 12% of their company is Tik Tok, and then they 3 million they're gonna be short. So imagine these guys are short 2-3. Well, I guess with them it'll be 2-3 billion Oh man, what could happen? And if that happened to Apple, it'll hit the tech sector pretty good. Suppose Amazon comes out and it's like, yeah, we sold a lot of shit, but we had a lot of infrastructure problems, vans breaking down or whatever. We had big COVID expenses. We have an inventory problem. We bought too much for Prime Day, or we didn't do as well as Prime Day. So now we got to get rid of all this inventory. Something like that. That's kind of out of left field. And oh God, then Amazon's down 10% in a day. I don't think Amazon dropped 25%, but a bigger drop than normal. Brings it down into basically its range. You saw how Fastly came down, and notice most of these stocks have that breakout range, like I just drew right here. So we saw Fastly come down into the range. Down into the range. So maybe if we start getting some warnings, maybe this will come into the range. Right? Little Amazon into the range. How about Tesla? Tesla don't have a range, but it does. It's actually way down here, right? Tesla into the range. You'd be like, man, that's way too far down. There's no way Tesla's going into the range. I don't know. How about Zoom into the range? Let's say Zoom's range is somewhere in here. Right? I doubt if it's going to go way back to 84. So I'm kind of giving it a little benefit of the doubt. There's the breakout. There's the gap. Maybe fill the gap. Peloton. I already know which range. It's between 180. And it's in there. That's the monthly candle I'm looking at. See the weekly. Well, actually, I take that back. Really, the ranges is down here in the 70s and the 60s. But you get my point, is if these stocks, basically they all high flyers, right? They're up $5, they're up $5 a day, 5% a day. They're up huge. Suppose they start warning or just don't do as good as we think. Now, Trey Trades, why don't you think they're going to do as good as they think? Why? How could that possibly happen? I'll tell you why. Right here. Right? Today was Thursday. That's the jobless claims came out. Jobless claims were worse than expected amid slowdown in hiring. Slowdown in hiring? Wait, we're doing really good. How is there a slowdown in hiring? I don't know. Anyway, first-time claims for unemployment benefits totaled 840,000 last week, higher than they estimated 825,000. So 25,000 higher. So it was 840,000 people knocking on the door, knocking on the glass. Hello, I lost my job. Could I fill out some unemployment? Yeah, okay, sir. Here, please fill out these papers and take a number, and I'll call you back. Suppose it's one of those numbers. I mean, basically, suppose it is one of those numbers. It is. But suppose this. All right, how could I put this? It is. Basically, I'm saying, with a lot of people being unemployed every week, numbers inching up, going towards maybe 1 million, even though I don't think it gets there before the election. Why? Because I think the numbers are fixed. Yeah. If it came out 1 million unemployed for the weekly claimed 1 million people on the unemployment line, who is not getting a nomination. It's not. How could you vote for him? Man, yeah, 1 million people lost their job. I know there'll be 1 million people not voting for him, at least that week. But anyway, here's the chart of the unemployment. And you could see, man, we was really recovering good. Stimulus, look, ran out right there, July 31st. Remember that? And now we kind of flatlining. You can't really see it on this chart, but we're actually ticking up. The number's been ticking up, I think since August. It's right about here. Right? But we definitely flatline to the upside. More flatline, and go into the upside. And you can see the continuing claims for unemployment. We're down to 11 million. That is a low. 11 million people every week is collecting a check. That's a lot of people, right? That's a lot of people, okay? that's not getting that extra $600. Remember that? That's not happening now because they're not coming out with a stimulus plan. I'm sure you already know. And most likely they probably not until after the election. Unfortunately, it's like that. And this is why the market is, that's why the market is actually doing pretty good today, because I don't know. It's hanging its hat up on this stimulus, but I really feel that we're not getting that until after the election. But you never know. They might be a skinny deal. And I think they only need $300 billion to put money in everybody's pocket. And then they can work that other shit out later. All right, so 11 million people. But don't let that number fool you either, okay? Because if you look right here, there's still 25.5 million workers collecting some form of benefits, more than half of whom fall under special benefits set up during the pandemic. All right, so there's a lot of people collecting some money. So basically, I'm pointing out that the economy is still in shambles. See what happened to TikTok? I know that's a different political type thing that's going on there, but basically, a lot of these stocks have run. The earnings better be perfect. We still have high unemployment. So maybe, and stimulus is gone. So maybe, just maybe, these companies come out and say, it was okay. It was okay. We did kind of what you thought we would do. Well, that's not going to be good enough. That did what you thought we was going to do is going to bring the stocks down. And it could be down like a FSLY. And I don't mean 27% down. That's like crazy, but a lot. Okay. Basically kind of put the top in and the stocks just start heading down. It takes the whole froth. Basically, the froth starts coming out of the market. Maybe that's what I should title this video. Is it the end of the froth? Dun, 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 dun. Anyway, that's the video. Tell me what you think. Hopefully I was able to put this together in a way that you could kind of see what I'm thinking. Hey, this is why I also don't do fundamentals, man. I like looking at charts or looking at technicals and be like, hey, man, this is going up, down, sideways. Hey, this is the trade right here. Boom. You know, you see some fundamentals, like you look at the economy, you see the jobs lost, and look, stocks go straight up. So that's why I just don't like fundamental. But there is reason to be concerned. And a lot of times when markets, there's always, before a downturn, there's always a sign. There's always a sign, and I'm thinking FSLY could be a sign. When we was down huge, oh man, I don't even remember when. But the sign was, it was the last big downturn. It was in, around the fall, the fourth quarter. Anyway, the sign was Bitcoin. Bitcoin led that crash, right? It went from 20,000 down to 10 and just so, whatever. And then next thing you know, the market started going down. Bitcoin was the sign. And I was saying to myself, you know what? Bitcoin. I didn't know nothing about Bitcoin, but I knew enough that people was going crazy about it. And I was like, man, Bitcoin's crashing. This could be, and the stock market looked fine. I was like, it could come to the stock market. Well, anyway, FSLY, see that overreaction, $2-3 million? And then we're going to lose 25% of the value, actually 27.4 now. I don't know. Even if they lose TikTok, let's say they lose TikTok, gone. Well, TikTok was only 12% of the business. So shouldn't they only be down 12%? Right? So if you believe that, I do. I'm like, well, okay, it's 12% of the business. Then this is a buy right here, right now. This is a buy. But the reason why it's down 27 because gotta blow off that froth. It's frothy. All right, so let me know what you think. A little different video for today. Yeah, put your notes in the comments and hit me up on Twitter, Dre Trades. Hit me on Instagram, Dre Trades, and right here in the comments, Dre Trades 2 on YouTube. So thanks for watching. Good luck in your trades. Dre Trades out.